Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. It's Trump's world and we're just living in it. April 2nd was dubbed Liberation Day in the States, and the president unleashed a raft of reciprocal tariffs on the world stage. Everyone, including the Americans themselves, are now still trying to figure out what this all means and get to grips with it all. Personally, I think there's little point in trying to keep up with everything as it emerges. The situation is changing on a daily basis, even at the time of recording this. What's clear though is that the world economy will be dealing with tariff-related fallout for some time, and this includes our own property market, but more on that in a bit. Believe it or not though, there were a few non-tariff related news stories in April, and many of them were actually quite positive and could hopefully allow us to be cautiously optimistic for the months ahead. Our economy, like many others in the Western world, is still facing its challenges, and it will be for some time. But some of our key indicators are moving in the right direction. Inflation fell to 2.6% in March, a better result than many economists predicted. Also, GDP saw an unexpected rebound of 0.5% in February, according to the latest ONS data. Growth is growth, and we should be grateful for anything that we can eke out in the current climate. Indeed, spring seems to have brought with it a lovely sense of optimism that's been long overdue to the market. As sunnier days arrived, retail sales grew by 0.4%, and our high streets could do with that bit of extra loving. Also, Nationwide had the annual rate of house price growth at 3.9% in March, while Halifax recorded 2.8% year-on-year growth, and the land registry itself registered a 5.4% increase in the 12 months of February, and all those figures came out in April. At least some of this growth can be attested to eager investors, some of whom may be coming from relatively surprising corners of the market. Savills reported that a record $2.5 billion was invested in single-family private rented homes in the UK last year. It also revealed that just over half, about 51%, of all UK build-to-rent investment in 2024 was into single-family housing, with the other 49% going into urban multi-family apartment blocks. Just worth keeping an eye on those type of assets, considering they're proving quite popular. And on investment, analysis from the estate agency John Minnis showed that 25 to 34-year-olds are opting to invest in property to build their wealth at buy-to-let investments, as opposed to purchasing homes to live in. Our own independent survey for our recent whitepaper added to this. It revealed that it's younger investors who are most keen to invest in the property market this year. If you haven't already, you can access our new whitepaper on investment diversification on our website for free right now. The white paper also goes into which regions and the investors within those regions feel particularly optimistic. And on that, Savills also found that prime London properties are currently available at a substantial discount. In fact, prime central London properties can now be found at discounts equivalent to those not seen since like the early 1990s. How long these discounts stick around for, though, is another question. But remember, bridging finance can be issued quickly where everything lines up to help those investors take advantage of those potential opportunities. Turning to the rental market, April presented plenty of news that once again showed that landlords aren't as downtrodden as they appear to be, or at least as the media makes them out to be. A Landbay survey revealed that 47% of buy-to-let landlords say they have no intention of selling any properties in the next 12 months. And what's more, data from UK Finance shows that buy-to-let lending itself surged 39% in the final quarter of 2024, even with tax rises, tougher legislation, and all those other challenges looming. And on tougher legislation specifically, the Renters' Rights Bill entered the Lords Committee stage in late April. It's one step closer to reality, and landlords need to be ready for all the changes that it will bring. If you or your clients need a refresher, we've covered the bill extensively on our blog page. We've got quite a few blogs dedicated to the Renters' Rights Bill. So head there now if you want to find out everything you need to know. All told, the residential rental market is in a fairly healthy position at the moment, with average rents rising by 7.7% in the year to March, according to the ONS. And yield-wise, Cohab, the self-management platform, research from them found that Manchester offers the best annual average yield across England and Wales at the moment, and that's at 6.35%. Looking ahead, regardless of whatever's on the way, the specialist market will have its role to play. The latest Brickflow Market Watch report found that bridging loan searches increased by 44.2% in the first quarter of 2025. It looks like more borrowers and investors are wisening up to the utility of bespoke finance, and hopefully that's obvious to you now as well. Also, fortunes may be rebounding in the follow-up stages of a property investment journey. So in response to Trump's tariff fallout and all the economic shifts that come with it, mainstream lenders appear to be engaging in a new price war. Several high street banks have been seen cutting their mortgage rates in recent days and weeks, and many brokers out there expect this to continue. This bodes well for bridging borrowers who are hoping to move on to long-term finance for their exit strategies, and that's worth keeping an eye on. Hopefully, as we move into May, we will see things calm down a bit with all the trade war rhetoric, which, again, that should ease pressure on the economy. Thankfully, we're already seeing signs that Trump is relenting a bit in the face of market turmoil. He started to pull back on some of the more extreme announcements. In the meantime, though, please remember that we at Market Financial Solutions will continue to lend in the face of this challenge and any that come after it. Thank you very much for listening, and I'll see you next month. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.